Hello everybody. So this video is entitled Nebius stock Q1. The stock is up 17%. Is it too green too fast? Is it a case of too green too fast? Because the earnings were good. There was one item that was slightly new in the earnings, which is they are adding 1.2 gigawatt in AI. So I guess it's somewhat positive of an earnings here. Also another site in Finland. So they were good, but it was nothing exactly groundbreaking or exactly new. They were good earning, perhaps worth a plus 5%. The stock has been on fire. I have a very hard time getting behind these moves. As you know, Nebius is now becoming an uncomfortably large position for me. And, this stock 11 months ago was $36. 36. This is the first video I did when I covered it. It was 36. It's now 208. So the stock has 6x, 6 times your money in 11 months. That's 700%. I feel like at this point, doing anything but sell is chasing, at least for me, who has been in it for a while. And the stock actually used to be way cheaper than this. It's a little more expensive now. It's not as cheap as it used to be. The 6x in 11 months, this is not my style of investing. I like more steady investing. I think the market has turned into a casino. The market has gone entirely wild because what exactly, and this is what I'm going to ask. Investors are very emotional. Let me ask this. What has changed for Nebius from 1 month ago? Like, what has really changed? Nothing much about the company has changed. Like, we had the giant Meta deal, the $27 billion deal, the Microsoft deal, the NVIDIA deal. We had everything just about the same. Aside from that PA 1 gigawatt site, it was just about the same a month and a half ago. Yet, the stock, let me show you, 135% in 43 days. 125% in, it's ridiculous. 125% in 40 days. Well, in what 5 trading weeks? I mean, this is ridiculous for a business, like I said, which doesn't have any, it hasn't had any substantial change. Namely, as a top-line revenue growth investor, what I care is with top-line guidance. There was no raised guidance. They just reconfirmed the guidance. Like, I cover a bunch of stocks who increased their guidance and are down 20%. And that's despite, like HIMS, for example. HIMS increased guidance and they're down. This stock does essentially nothing except add another site, and the stock is up 125%. This is all about the denominator. This is the denominator not knowing what to do. These are stocks that have been suppressed like crazy in Q1 as they were reporting all of this good news, like the 27 billion Meta deal. That was amazing news for Nebius. It should have moved much more when that deal was announced. And now it's just playing catch up. We are up 125%. 125% in 43 days for really something that hasn't changed that much. As you can see, they're on track. On track. So that's not new. All of this info is not new. It's not new. And by the way, if that new site, if that new acquisition had been announced, maybe not a month ago, but what if this has been announced like mid-March? Like the market would have freaked out and say, oh, CapEx bad, and maybe would have sold off the stock. So anyways, the earnings were great indeed, but they also did not have that much more information than what we already had. They were great indeed. It's worth a good 5% up, but there was not that much more information. So my viewpoint on this, and that might be a bit of a hot take or something like that, but I'm waiting for them to raise more capital. I have a feeling that they will do some form of a capital raise because they gotta do all of these investment, they gotta finance this growth. I'm waiting for them to raise some capital, and let's see how the market reacts to that. Because to me, I just can't get behind 125% in 43 days. Doubling in 40 days, more than doubling in 40 days. To me, that's when the market starts to feel more like a casino, and the first half of 2026 has been very tough to understand these price movements, these stock price movements, as opposed to the underlying business. Nebius is a business whose underlying business has not really changed in a year, but the valuation has been a roller coaster, an absolute roller coaster. But at an EV over GP over RG of a 0.18, now it's still cheap, not going to lie, still cheap. But I remember when this stock was a 0.05. So 0.18, we just on my metric, which I update every quarter, we've tripled the valuation on my metric. And of course, the revenue growth has also, the guidance has also greatly increased. The business has been executing, but I think the market is getting perhaps ahead of itself. The market is getting a little wild, perhaps, right? I don't know, but to me, that doesn't make me comfortable. Plus 125% in 43 days. Nearly a 6 to 7x in 11 months. I just don't have enough time to know this company, right? It's like, if I'm gonna invest a substantial amount of money in a company, I want to follow it across cycle, over multiple years, learn to know them, right? How do you get to do that when a stock 7x in front of your eyes? You barely have time to build a position. So anyways, I'm happy for them. The business is doing fine under the hood. I think the price action is wild. I think the price action is wild, and frankly, I'm gonna let it run. If it keeps going, I might sell my stock. I'm gonna let it run for now, but if it keeps going, I might sell my stock. Don't get me wrong, I'm happy. It's just that as a stock analysis channel, 125% in 40 days is ridiculous. So there's deep issues in the market not knowing how to value these stocks. There's deep issues with the flows of money at the denominator level, and the market being risk on, risk off. So this is quite frustrating, actually, quite frustrating. So this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.